What are the main takeouts of Philip Lowe's appearance today?
Yes, very much as you were just saying, inflation is damaging and corrosive. Dr. Philip Lowe really hitting home that message. Now, the Reserve Bank thinks that inflation did peak over the last few months of 2022, the December quarter, where over the year inflation rose 7.8%. Dr. Lowe went into some more detail. Travelled, cost of domestic travel, he said demand's still really high. That boosted inflation, as did durable goods and even going out. However, the Reserve Bank sees a decline in the level of inflation because of the higher interest rates, expecting over the year inflation to fall to 4.75%. But that's still really high. By mid-year, they're expecting 6.7%. So his key message was the economy is strong. Employment is very strong. It may have increased to 3.7%, but that's still near a 50-year high. The terms of trade is at a second highest level on record. The terms of trade is the difference between import and export prices. So we're getting record revenue or huge revenue from our exports. One of the reasons is the war in Ukraine. Even though prices have come down now, they are expecting the economy to slow. And the jobs growth is still holding up. So the key message is that expect more rate rises, as you just heard. Now, also, of course, Dr. Lowe was quizzed on that infamous comment that don't expect any rate rises are unlikely until 2024. He went further. He's been grilled on that many times. In fact, I think he's the most televised Reserve Bank governor. Certainly probably the only one that's got chased down the street by camera crews recently. But he, again, went into great pains to say that at that time, we were in a pandemic. We didn't know how bad it was going to get. If we did too much, so be it. We had to walk it back. It may be embarrassing, but that's what happened. Let's have a listen to what he had to say.
The board kind of consciously discussed it. There wasn't a paper kind of with the title, should we change kind of the nature of forward guidance? But at every one of those meetings that we're having in 2020, we kept on saying, what more can we do to help Australians through this dire situation? And we did what we thought was right, based on the information we had. Turned out we did too much, and we've had to backtrack. It's kind of difficult, and I'm getting a lot of pushback on that. But given the information I had at the time, we want to do everything we could.
So at least one more interest rate rise to come.
Yeah, well, actually, they say rises, so 2 to come, we expect. So he said that this week when he was grilled before the Senate, and also last week when they raised interest rates again by 1/4 of a percentage point to 3.35%. They said in the statement, Dr. Lowe said in the statement, further increases. So that's at least 2 more increases. The market is saying maybe 3.75, 3.8. National Australia Bank just updated their forecast to 4.1%. Now, the other thing, he was asked about the rise in the unemployment rate. So in December, we saw the rate at 3.5%. It rose by 1/5 of a percentage point to 3.7% in January. Dr. Lowe and also another senior official did go into detail, though. One of the reasons it increased was seasonality. So it was taken in the first 2 weeks of January. A lot of people were still on holiday, and also the RBA, Lucy Ellis, pointing out that a lot of people, 100,000 people, waiting to start new jobs.